allow me bring back the discussion to the studio, where I am joined by very, very eminent persons when it comes to business and economics. The discussion this morning is going to be on the shifting trends in reserve management by economies across the globe and the use of gold as a standard backup for currency. Here in Uganda, we shall be understanding what exactly gives us the kind of a foundational strength for our Uganda shilling to stand the test of time in light of the volatility that is often experienced across the globe as the dollar does maneuver against increasing forces of gold reserve accumulation by countries including China, Turkey, as well as emerging economies. The dynamics are complex sometimes, but we shall be able to break that down into modalities that we can go with home and write home about. I'm joined on set by Dr. Fred Muhumuza. He's an economist and seasoned commentator and a usual suspect on Morning at NTV. Many thanks for making it once again.
Morning viewers out there.
And also welcoming Alex Kakande. Alex Kakande is a financial analyst, and I understand you are based in Bermuda. Bermuda, the last time, my interaction with the name or the country or the place Bermuda is always on that mystery thing, but I won't take you there, no doubt about it. I'll keep the conversation strictly to the modalities of finance, FX, as well as gold reserve backup for any currency. Let me start with our guest today. For us, we are, of course, very familiar with each other. Just take us through what you do first, but then also help us understand, in line with this morning's topic, understanding the changing trends of gold reserve management across the globe and how exactly gold stands out as a backup for currencies, especially in light of the battles that we see, geopolitical tensions that other countries want to get ahead of others.
Thank you so much for having me. My name's Alex Kakande. As you have said, I'm a financial analyst based in Bermuda. I'm happy to be here, but on today's topic, where we are starting to see a shift globally on many different countries trying to adopt a gold as a backup for their currency, moving away from either majorly the FX of the US dollar or other stronger currencies like the GBP or the euro. What we are starting to see is a geopolitical movement which was started by the BRICS, trying to make sure they are having a strong support and backup for their currencies away from the US dollar, especially the China, India, and Russia, which is sitting on a significant gold reserve. They're trying to kind of start to break away from the backup of the US dollar, and especially on what happened in 2022-2023 after the Ukraine war, when the US froze a significant amount of assets which were backed by the US dollar for the Russian economy and the Russian oligarch. That has literally led to countries to start to rethink, especially those big countries in the BRICS region, have started to rethink how can we move away from the dominance of the US dollar. And the best way to move is to go back to the original, because gold was the original backup for every country.
That is right.
Yep.
Okay, that's quite interesting. It does play out more like it would play out if it were an arms race. This time around, since it's economics, it's a gold race. Doctor, I know there's a lot that you have your fingers on in terms of the goings on, especially across the globe, the tensions brought about by Ukraine and the fact that some countries decided enough was enough with the US dollar and needed to begin to trade. And that was seen mainly as India, Brazil, and what's the other? The seas, China, and of course South Africa. The shift is significant. It's been seen. We see economic summits, the conversation is geared towards that. But there seems to be a way the US dollar has its claws in the ground, more like a lizard, a monitor lizard does when it's under threat. Just give us this perspective so we can understand where we fall within what is no doubt a complex playing field.
Yeah, thank you. I think really to pick from where he's ended, we're going back in time, but what was that time like? People need to know the origin of money. Really was barter trade. You give me a goat, I give you how many chicken. That was really a complex problem.
Yeah.
How many chicken are in a goat? But that's how people used to transact. And then it would be difficult for you to move around villages with a goat to find who has chicken and needs them.
That's right.
Now, gold came in at that point that it was easier to move. It was durable because gold is not going to get spoiled. So people would move with their gold in pockets. And I give you gold, you give me cows. I give you gold, you give me whatever it is.
Yeah.
But then, like we've seen here, when you move with money, robbers will look for you. And in America, those cowboys and whatever, it was really raiding trains full of gold.
Yeah.
So people discovered that the blacksmiths really had big safes because they were the welders. So they had big safes where they could keep their gold. So you keep your gold with a blacksmith. My gold is there worth $1 million or 1 million shillings.
Yeah.
Now the blacksmith would give you a cheat to indicate that he has gold with me worth this much. Now all you would need
to the other one.
Exactly. All you would need to move with is a cheat.
That I have gold somewhere.
That I have gold somewhere.
Okay.
So that cheat became the beginning of paper money. That now I could show you a cheat and say you give me the cow, you will go and pick the gold from the blacksmith worth this much.
Who has the storage facility.
Who has the storage facility, and so the gold started not moving. But remember, for every cheat, there is an equivalent amount of gold, what we call it the reserve.
The reserve, yeah.
Now, even me now, I don't have to go for the gold blacksmith. This cheat you have given me, I will give it to another person. So the cheat began moving around without anybody picking the gold. But the gold had to be there.
Yeah.
So
it was a shift in value from one person to the other.
From one person using this cheat. That cheat became the paper money, the origin. Now even every time you move with the Uganda shilling, there must be an equivalent backup with the central bank. Now that backup around the 70s changed to dollars. America swapped and said, hey, you guys who are using gold. So they presented the dollar as the mighty reserve for the world. So meaning, what gives value to the Ugandan money, if I take it to Kenya, if I take it to Rwanda, these Rwandans will know that if I really want to change this Ugandan money, there is an equivalent dollar reserve out there to it.
Yeah.
Now, because of the uncertainty, the geopolitics of the dollars, people are saying, hey, wait a minute, Americans can decide anything. You've seen them put sanctions on Ugandans. So what if I had my account in the US? It means I can no longer access my account. And that's what happened to Putin. $600 billion frozen in the US. They can't access their money, but it is your money. Now, Uganda, we keep our dollar reserves again in the US. If we annoyed the US and they said, hey, Uganda, you have how many dollars here? $3 billion. Don't come. Now, we will be at zero. We will be at zero. And nobody will take the Ugandan shilling seriously because they know even if I presented it, they know the reserves
at that point it will become worthless.
So the world is beginning to say, hey, we need to find alternatives because these Americans are very naughty. Now we're all watching Trump is coming, Biden is here. What is going to happen to American foreign policy? And with these experiences, the geopolitics and how it is coming, and certain people have reverted back to gold. And that's the whole point, that India, Russia, China, Brazil, the BRICS he talks about, would be running back to gold.
But allow me just interject here, especially to understand where the transition or the realization that there was need to move away from the dollar to gold came about. When you speak about the fact that the Ukraine-Russia war occasioned a freezing of a significant amount of Russia's reserves, the BRICS rose out of the need to improve trade between these nations away from the United States, not primarily to do away with the dollar, but to ensure that trade increases in order to move away from what was believed, I think, to be the high tariff system and a landscape that America had occasioned upon the rest of the world. Now that the gold question comes into play, that looks like a secondary aspect to it. I don't know whether I get this right, but that's what it looks like.
It's a cascading of events.
It's a cascading of events.
Okay. because the people knew the Russia, Ukraine is just part of a long journey of how do we break the American dominance of global trade and power.
All right.
But also remember, if me and you are keeping our reserves in the US, now the US can use that money to do its own other things. It can even lend it back to you by just doing books of accounts. So you want to break that financial power.
All right. So submit on that, but also show us where the real transition, the need for the dollar to transit away from the dollar to any other currency for the global powers, economic powers that is, really begins before aspects like the Ukraine war comes in, the emergence of the BRICS comes in.
Thank you so much. I think we have to take a step back and appreciate that globally, everyone appreciates that everything, especially every currency, is backed by the US dollar. And the US dollar, their best friend are the Western countries. So the BRICS have always tended to want to, they control almost 40% of the population, but they do not have so much say when it comes to their currencies and their economies.
That's right.
And the global economy. But the best transition or representation of how the gold has supported a currency in stabilization might be actually Zimbabwe. We know for the past almost 10 years, hyperinflation of the, at one point they had a note of $1 trillion. You can imagine you have a note you're working with which is $1 trillion. It's until last year when the new central bank governor of Zimbabwe introduced a new Zimbabwean note, the ZIG, which is this time around backed by the by the gold.
By the gold.
No longer backed by the
dollar.
By the dollar. Actually, it's called the Zimbabwean gold note, right? And that has, for the past 8 months, for the first time, they are seeing stability in their currency. It's not so much fluctuating against the other big currencies. And because Zimbabwe is sitting on a significant gold reserves, and I think they're top 10 producers of gold in Africa, that has given them stability. And everyone is starting to say, oh, so this can work, especially if it has worked in a country which had hyperinflation. Now, also that is for one country, but when you think about the geopolitics of the BRICS, and maybe where Uganda might be looking at is to say, okay, if we want to long run, because we look at gold as an investment, that the country or the central bank of Uganda is buying gold to keep as to back up our foreign reserves. It's an investment. Very few products or very few currencies have performed better than gold in the last 5 years. It has almost doubled in the last 3 years. The demand for it is increasing. It's bringing in the best. It contributes almost 40% of the FX to Uganda. So they are seeing the shift, and globally it's the same shift. So I think that kind of gives them perspective to say, oh, are we sleeping? Should we also start moving away from the dollar and move to the gold? And I think that's the question that they are trying to get to, and get that to go into that direction.
All right. Doctor, what's the conversation like within the economic managers in Uganda? Our own ability to transition, I think it's a discussion that I'm not even capable to begin to, to trigger. But at what point do we say we have significant gold to make gold our reserve away from the US dollar, and then begin the shift that any other country is making?
Yeah, I think besides the other countries, we also have our own concerns, because our own reserves have been going down, and we have big foreign debt payments coming up.
That is right.
So it's better also to begin beefing up alternative reserves of gold and dollars, because you'll even be meeting part of our foreign payments to IMF, payments to World Bank, African Development Bank, and others in dollars. Okay. So you can easily run down your dollars. So you want an additional complementary reserves, which would be in terms of dollars. So the global geopolitics alone, we have our own reasons, economic reasons. As you're saying, the economic managers are seeing the need for this. Now, this is a conversation that has been happening for quite some time, because Uganda is now exporting quite a lot of gold. The BOE records are indicating us we might have reached levels of $2.8 billion of exports.
Worth of gold.
But knowing that this is transit gold, literally, because it comes in from neighboring countries and other countries that come here to benefit from our good refineries, our net is possibly less than $200 million. Now, you want to tap that and say, why am I watching all this $2.8 billion worth of gold
simply
go away from me,
yeah,
when I also will need it for my own other reasons? So I'm very happy that finally the conversations have turned into reality, that we are now able to buy and beef up our reserves in terms of gold. And as I've said, gold backs up your trade. Now, when I don't need dollars to go and buy cars in Japan, as I've said, all I need to indicate to the Japanese, I have I have gold worth 8 billion in my central bank in Uganda.
Yeah.
Now the Central Bank of Japan and the Central Bank of Uganda will make that transaction happen, knowing very well, should we need Uganda to pay, the Uganda has the gold, and the gold doesn't have to move. So it's also going to be backing up our sales, international sales, without necessarily us requiring to move with the dollars. And I'm looking forward to those levels, because it becomes safe. It's just like a bank check. I have money there, I have money, I give you a check, you give me the goods, we move on. The banks will internally move the monies if they have to. But the bit with gold, it doesn't have to physically move.
It doesn't have to physically move.
So those things are safe for us, and I think it is the best way for us to go.
But with regard to Uganda and any other African country that seeks to make that critical transition, Zimbabwe, like you say, has been able to stabilize its own economy because it has a significant amount of gold in reserves. It already has that. Now, for Uganda, like Doctor says, what we have in terms of reserves is way lower than what we export, because we are simply a transition point, because we have the refineries. But across the globe, the players who are looking at gold as a backup for their currencies are already far developed economies than Uganda or any other within the region. Now, within the complex financial system across the globe, which sometimes appears like, operates rather like the shifting sands in the desert. Today you wake up and the storm blows, there is a whole hill here. You wake up tomorrow, another storm has blown and just blocked a highway. How does Uganda work towards ensuring stability so that even if the US dollar at any one point in time plays against us, we are able to quickly say, we have the dollar, and therefore we should be able to ensure stability, especially for our shilling?
Thank you so much for that. I think you have to first appreciate that the UGX which we trade in, when every single time there is a shift, either a reduction, like Doctor talked about, reduction in our FX reserves or the dollar reserves, you always see some volatility in the UGX. Now, when you start having an investment that is other than the dollar, but of which also it appreciates in value, that gives you some hedging against any movement in the FX, in the dollar versus the UGX. Because, yes, I know we are trying to, for Uganda, they're trying to start investing in the gold as a reserve, but it's still going to be mostly dominated by the US dollar.
Yeah.
But when you start having a hedge against any movements in the dollar, then you start having a little bit of stability. And what that does is, at any one point, we have been, over the last 2 years, we have been in a high interest rate period where we have seen significant outflows of the dollar from all the economies back to the US.
Yeah.
Now, all of a sudden, we are not worried because now we have our gold. So however much the Feds in the US increase the rates, and the rates which drag out dollars away from almost every emerging economies, we are like, oh yeah, take your money. But also what Doctor talked about, what we are almost exporting a $2.8 billion every year. The dollar is contributing almost 40% of our FX earnings. I think there was a report 2 years ago that Uganda is sitting close to 10 billion worth of gold. And when you read the report from Bank of Uganda, they are trying to target buying gold from the local miners. Now, if that report is correct, that we have over $10 billion worth, at least on the international scale, we are not ranked as a gold miner or exporter, especially which is local minerals.
Yeah.
So you have to think of, like, they're trying to say, okay, by the time our local miners and craftsmen start getting that gold out, we can tap into it when it's still cheap, keep it for ourselves. As the price goes up for us on our books of accounts, our value of our UGX goes up. So in the long run, it serves better the country, instead of always waiting when do we have to earn the dollars for us to back up our UGX. That stability alone, that hedging of the volatility, can go a long way, because you do not want to be in a situation where in 1 year, God knows for whatever reason, your currency is losing 30%. of its value, or even 50%, or even 100%, like it is in Nigeria. So when you start thinking long term and say, how do I hedge that? Nothing beats the dollar, nothing beats gold when it comes to hedging FX volatility of your currency. And I think the team at the Bank of Uganda and the different economists who are engaging in this conversation are seeing that, and they are saying, hey, we cannot wait to see what happened to Nigeria, what's happening to Kenya here, our neighbors. That volatility, it impacts trade, it impacts everything. We need to start hedging against that, and the dollar is the best way to hedge against that volatility.
Okay, is that what I see in the oil sector when people begin to say that what happened to the other countries ought not to happen to Uganda, and we are doing all the back-end stitching and ensuring that all the legislation is available. Has that conversation begun for gold?
Yes, that's what I'm saying.
Or we already have policy arrangements that can help us?
It may not necessarily be a policy, but really a strategy and understanding of what should we be doing. And that's why I said the
question is, do we?
There have been a lot of conversations.
Level?
Yes, there have been a lot of conversations between the central bank, the gold, I don't want to say dealers, the gold actors in that space. Because dealers sometimes comes with the wrong connotation on people. these are actors, really. But also on the Ministry of Finance.
Yeah.
So those conversations over the last almost 3 years have really given a clear picture on what needs to be done. Now, the other part, as we talked about, the economic managers, which now we should be concerned about, you can easily end up with a very strong currency, the Uganda shilling.
Wow.
Can become very, very strong because of these huge reserves of gold and dollars, that even when the dollars are not there, your reserves of gold will really make your shilling strong.
That's right.
Now, that creates what people call the Dutch disease. That one part of the economy is so strong and can undermine the other components of the economy. So if you have a strong shilling, it's not good for exporters of coffee, of tea, of fish, of maize. Because imagine if I sell and get $100 from my exports and come to convert it at the local shilling and find the shilling is 3,500. You get less money than if the shilling was 3,900. So a strong local currency will hurt the exporters, but it will become very good for importers. Because for them, they need a few shillings to get so many dollars. So you begin to lose out on investments that even people would have set up factories in Uganda would prefer trade. And we've seen that happening strongly now. With the government trying to put industrial parks, they will become literally assembly places.
Points,
Because I'll be buying from China, from Japan, from India, and just come here to assemble. I may export a few things to Sudan, but that's not really what drives the economy. So we need that dicey place to say, where should the shilling be in order to protect the exporters who actually are the real local drivers of economic development at the domestic level.
Interesting, the real drivers. Yes. Now, where does this place the ability of other players other than central banks and governments, for that matter, to ensure that trade in gold, for example, is streamlined? Our local miners are still struggling with very, simple things, the ability to refine it or simply be able to get quantities that are significant enough to drive the kind of deals that they might want for supply. How do we ensure, because right now what I see, investors are flocking in droves towards the precious metal, but this is in the Western markets where $2,300 per ounce after hitting a record 2.449.89, that was on May the 20th. That's a gain of more than 11% this year, and that has all opportunities to it. For us, the government hasn't gotten its fingers on the gold, let me call it, tab. How will the private sector find their way when the government hasn't found its way yet?
Now, you have to appreciate that in specialized sectors like the gold mining, you will always find very few players. And the deputy governor of Bank of Uganda is on record saying the bank will always pay a premium to the local gold.
Okay.
So when you say that, you indicate to what he called the gold players that, I'm about to get more money if I'm to sell to Bank of Uganda than if I export it, especially now that I don't have to incur transportation, even maybe taxes when you have to export that gold. So that indication alone, from that word alone, sometimes what you say, a word from a deputy governor, Bank of Uganda, is a word you can easily take to the bank that I need a loan to go and modernize this gold mining, you know. So for as long as the Bank of Uganda is committed to buying locally, local mineral gold, then you would expect that is going to give a shift to the gold players to say, oh, let's invest heavily in the local mining. Yes, what we have seen, what we call our gold exports is a net import. We import most of it, refine it, and take it out. Ours in Uganda is still very small. But given that the shift,
that's a bit of a dilemma. We could give market sentiment a completely wrong picture for those that might want to be players. How do we avoid a situation where the whole thing is not misrepresented for people to make wrong investment decisions?
I think it won't be a wrong investment decisions, because like you have talked about the price of gold, the refined gold, globally the price is very good. It's increasing 11% this year. Last year it had almost a 30% jump. So even when I can't sell to Bank of Uganda, all of a sudden I can easily export that globally. And see, also Bank of Uganda is not setting a price. It's not a forward price to say, I'll buy your ounce at 2,400. No, they will have to buy at a competitive market price.
All right.
And in part of the report by Bank of Uganda, they talked about that they will always say, the day they agree on the trade, they will always look at Bloomberg and say what is the price on that particular date. Let's say it's $2,500. Then they convert that to the UGX. So they no longer need to pay you in the dollars, they pay you in the UGX, which is our local currency, but get something worth of a dollar value. So that, as a private player, even if I cannot sell, I can't agree a price by Bank of Uganda, I can easily just export that, because right now what we cannot deny is that the global demand for gold is on the rise, the price is on the rise, that I can use that as a negotiating basis with the Bank of Uganda to get a very good price for them to start stocking up on this particular gold.
All right, I'm afraid we are out of time, and the conversations will continue to pile. I would love to have Dr. Muhumuza wrap this up for us, and also maybe show us what kind of trade dividends we have with the countries that are stockpiling gold. Have we shifted to China? Have we shifted to Brazil? Because if they are the ones that are leading the stockpiling of gold as an alternative to the dollar, we must be seen to make incursions in trade with these countries, or else the whole idea will be some sort of a smoke screen.
Yeah, it's a good transaction. Quite often Uganda trades with China with in terms of imports, with India, with Japan, and then these guys who sell us the oil.
Yeah.
Those are mainly, and then of course Kenya, Tanzania, we're having a lot of those trade dealings. And now the gold, as we said, will not have to move. But if I want to pay Tanzania, I can't find the dollars, I'll simply tell them I have my stockpile of gold. And then the central banks will make sure that trade happens, which is a very good thing for us. But on the other side, the artisanal miners really are scavenging at the top. Gold sits kilometers underground. Yeah. And we're looking forward to
kilometers underground.
Kilometers underground. That's why you hear when people are sunk in mines to excavate those guys who have those disasters. You really take time getting people from that. So gold is hitting down, and there is a government plan. They have now a mining company, which we are saying should partner with the other private sector players to get that gold out of the ground. The artisanals are just like small flying on the top
surface area.
So we want to do deep shaft mining. Then we'll have our own gold come out, and we'll beef up the economy. We can pay off our debt if we use the gold.
If you're able to use.
And then we'll also leverage the geopolitics, because right now the gold is coming from the geographical surrounding, but it has its own politics. People can come and say, hey, why is Uganda doing this? Gold might be funding some rebels out there. And you meet another global conflict that you do not want.
All right.
So I think we're on the road to the best places. If we can get that gold out in 3 years, I think our debt will now be manageable.
When we do, I hope we manage it well.
And we